Imagine waking up one day and realizing your hard-earned money has been quietly shrinking, not because you spent it or invested poorly, but simply because it was sitting still. This isn't a nightmare. It's the silent erosion of inflation, a reality many face with traditional savings. Every day, the purchasing power of your money diminishes, often unnoticed. Groceries cost more, gas prices climb, and rent seems to increase year after year. Your savings, meant to secure your future, are slowly losing their value. This is the hidden risk of traditional savings accounts, a risk many are unaware of. Meet James, a diligent saver, proud of his $10,000 tucked away in a traditional bank account. He logs into his account, a small smile playing on his lips as he sees the static number. It's a comforting sight, a symbol of his financial security. But what James didn't notice was the almost negligible interest earned over an entire year, barely enough to buy a single cup of coffee, while the cost of everything else continued to rise. His money was safe, yes, but it wasn't working for him. It was losing ground. One evening, James decided to dig deeper, questioning if there was a better way to save. That's when he stumbled upon the concept of high-interest savings accounts. High-interest savings account, or HISA, is simply a savings account that pays a significantly higher annual percentage yield than traditional banks. It's designed to help your money grow faster, outpacing inflation and preserving your purchasing power. Unlike traditional accounts, HYSAs are often offered by online-only banks or credit unions. These institutions typically have lower overheads, allowing them to pass on higher interest rates to their customers. James realized this wasn't some complex investment, but a smarter way to manage his everyday savings. So why don't more people know about these accounts? The answer lies in the business models of traditional banks. They thrive on your money sitting idle, lending it out at high rates while paying you minimal interest. Their extensive branch networks and operational costs mean they can't afford to offer high rates. Online banks, however, operate with significantly lower overheads. This efficiency allows them to pass on more of those earnings back to you, the customer. It's a win-win. They get your deposits, and you get better returns. So, is there a catch? Not really, but there are things you should always check. First, always verify the annual percentage yield, or APY. This is the real rate of return you'll earn, including compounding interest. Second, ensure the bank is FDIC insured. This protects your deposits up to $250,000. It's the same protection you get with traditional banks. So your money is just as safe. Third, check for any fees. Some accounts might have monthly maintenance fees if you don't meet certain requirements. Fourth, consider accessibility. How easy is it to deposit and withdraw funds? Finally, be aware that APY rates can be variable and change with market conditions. James meticulously read the fine print, comparing options to find the best fit for his needs. He understood that a little research goes a long way in securing his financial future. One of the most powerful aspects of a high-interest savings account is the power of compounding. Compounding is when you earn interest not only on your initial deposit, but also on the accumulated interest. Over time, this creates a snowball effect where your money grows exponentially. Let's say James deposits $10,000 into an HYSA with a 4.5% APY. After 1 year, he'd have $10,450. The next year, he earns interest on that $10,450. Who should use a high-interest savings account? Almost everyone with a savings goal. They're perfect for building an emergency fund, providing a safe and accessible cushion. If you're saving for a down payment on a house, a HISA keeps your money growing while you save. Planning a dream vacation? A HISA can help you reach your travel fund goals faster. They're also ideal for any short-term savings goals where you need access to your money but want it to earn more. James felt an emotional shift. He wasn't just saving, he was actively growing his wealth. He realized that financial growth isn't just about earning more income. It's about making smarter decisions with what you already have, making your money work for you. High-interest savings accounts aren't revolutionary in their complexity, but awareness of their benefits and how they protect against inflation truly is. Your future self doesn't need flashy high-risk decisions. It needs informed ones. Sometimes the quiet moves are the smartest ones. Don't let inflation silently erode your savings. Take control of your financial foundation. Make your money work for you, not against you.